Talk a little bit about billion-dollar valuations, or what people are calling unicorn companies. Now, there have been billion-dollar valuation companies for a long time. The difference is that now they're happening so rapidly and so frequently that you can even go to like a website like Crunchbase and take a look at a billion-dollar unicorn chart where they're like comparing all these companies. It's kind of ridiculous because they are valued at $1 billion sort of on paper if you're only looking at like the bottom line valuation. The problem is that striving to become a unicorn company, in that search, people are overreaching, and companies around here and also in other parts of the country are accepting terms from venture capital groups and private equity funds and banks and big financial institutions that will actually really hurt them in their next round or their IPO, because there's so many clawbacks, there's so many priority rights, that in an effort to become part of the unicorn club, they're really doing themselves a disservice. Now, my favorite example of this, it's a counterexample actually, is a company in Cottonwood Heights here, which is Instructure, which is filing for an IPO. It's offering about $750 million worth of shares in its IPO. And they have resisted the temptation to go out and try and get that big B unicorn valuation. And because they've resisted it, the founders, the VCs, and the current staff at the company stand to make a lot more money at the IPO than they would have otherwise. I think it takes that kind of leadership that is willing to cut off the short-term gains for the long-term value of the company and for everyone involved. So anyway, a couple thoughts about valuation, unicorns, and leadership.